What is going on, everyone? This is Andrew O'Connell with Pristine Capital coming at you with yet another market recap video. This is like take 4 for me. It is November 19th, 2020. Please like this video and subscribe to my channel if you enjoy this content, and I will continue to make it for you. Today we're going to be talking about the price action in the indices, volatility. We're going to go under the hood and check out those sectors and style factors, the one lotto trade that I took going into tomorrow, and then we'll wrap up some options order flow. Before we jump in, nothing in this video should be construed as investment advice or recommendations. Please follow your own trading plan. And last but not least, do not YOLO your entire account into any one of my trades. So let's jump right in. And we will start by going through the headline indices. We had the S&P 500 up 0.42% today. The Qs were our leader today, which is a bit of a change, up 0.78%. We had an IWM up 0.77%, and we had the Dow Jones up 0.19%. For the most part, I was watching the S&P 500 today. And the reason why is because, as I've been talking about with these videos lately, if you take a look at where we are in the S&P 500, we have essentially been in, a range for about like 2 months now. And that range has included some very bearish sequences and some very bullish sequences. So you can see here, big down move for about 2 weeks, big up move for 2 weeks, down move for 2 weeks, and now we've had an up move for 2 weeks. And sure enough, it looks like we might be falling over a bit. So, the trend is still looking bullish. We're above the monthly value area. But given that we're starting to fall apart here a little bit, I just wanted to draw these trend lines out. And the reason being is, when we had these two big moves, I sort of got caught in both of these moves where I made a lot of money on these, bullish sequences. But then in terms of each one of these bearish sequences, I pretty much drew down quite a bit. So luckily, the good thing is we hit this 35.76 level. I took a drawdown, but given that I was adding to my positions, the next time we got here, my account was a bit bigger. And then ended up drawing down here. But then now that we've run up, my account is a bit bigger as well. So I've been able to navigate these markets, but if I hadn't taken these drawdowns, in this down channel and this down channel right here, I would be in such a better spot. So that is why, in terms of this video, I really just want to focus on what are we going to do if this does turn into a downtrend, because if you can avoid a drawdown in these down sequences, you're really going to compound your account that much faster. So let's take a look. I mapped this out on the hourly chart, and I drew the trend lines here. And in my opinion, it's pretty safe to say that, if we start moving above this trend channel right here, that's a good thing. And basically, you're good to go in terms of adding risk. The rally continue. But right now you can see, we had this point right here. I was like, you know what? I'm in a good spot in my account. So I'm going to de-risk myself a little bit heading into this OPEX. Let me just scoot this over. So I was offloading a bunch of my positions up here, and I was very vigilant this time. And I actually was able to add a couple of hedges onto the books. When we had that first drop on the New York shutdown news. But at this point, we're sort of in this downtrend. And today we had a very above the downward trend line on these 2 hourly candles. And the close definitely looked very bullish. So, in terms of how you're positioning, it definitely makes sense in my opinion where I want to see us move out of this downtrend definitively. And you can see here, in the after hours, we traded below the monthly point of control, and it looks like we're taking a bit of a bounce. But I would just be very careful. Like, if we do get some, like some nice price action tomorrow, you can certainly day trade that or whatever. I'm not saying like don't take any longs or anything like that. That's for sure. But I would just be very cognizant that we are in, on the shortest of time frames, like on the hourly time frame, we just started a very small downtrend. So that's really the main takeaway. Just be conscious of your risk. That's really all it is. Like, certainly if you're a long-term investor, none of this applies. Well, like me, for instance, like I trade a P&L and I'm really trying to go for like very stellar performance. So like if you're a short-term trader, this is the kind of stuff you want to be cognizant of. Like, you don't want to be like, just like taking on big long positions when we're at the beginning of a down sequence. Let's take a look. We'll check out the Qs as well. And the Qs, recently the Qs have been lagging the rest of the market. But given that we had that, news of New York shutting down, we ended up getting a nice move in a lot of these tech stocks today. So you can see the Qs, they are trading above the monthly value area, trading above the 5-day EMA. These are looking pretty good, but we'll just have to see, because this could really end up being a counter trend move where, these tech stocks are outperforming while all these places are announcing shutdowns. Like we just had the California shutdown. But you do want to be cognizant of the fact that there is a vaccine that is out. So like that vaccine's not going to be getting to us for another month or two. But you just want to be cognizant, because if we start getting nice moves in a lot of these high flyer COVID winners, I would be willing to bet that there is going to be some institutions that own these companies that they go, hey, like, I own a lot of these COVID winners. We have this very temporary COVID shutdown. Let me sell some of them into the strength. So I wouldn't be too committed to them. They might get, like a nice move in the next week or two. But I would just be cognizant of that. And we'll take a look at the sectors for today. We had energy up 1.62%. We had cannabis up 0.71%. European financials, which just never seem to go down, up 0.63%. And then for our losing sectors, the ones that have the least momentum, we have the gold miners, which just cannot catch a bid, down 0.78%. We have the utilities down 1.08%. And we have medical devices, which caught a small bid, up 0.38%. But again, the main takeaway from these sectors is basically all the COVID winners today caught a bid. There were a lot of nice moves in some of the individual names. So like I'll walk through some of these individual names that just had really nice performances today. So like these names like Zoom. Let's see what Zoom did today. Oh, wow. Zoom didn't even do that well. Wow. This one, I'm sure a lot of people are like still clinging on to this Zoom, but this thing is completely broken its uptrend. It's forming a nice little base here, so we'll have to see what it does, but it's not going to look good. Like when we have the vaccine is out, most employers are going to be thinking about like, what's life going to be like when our employees are back? What software and services do we need to accommodate more people in the office? The focus is not going to be as much on like, we need video conferencing and things for work at home. So that's why I think for this stock, like it's a great company, but the narrative is essentially going to break. Etsy was one that had a really nice move today, up 5.9%. This was great. And I talked about this one in a prior video, but it formed a really nice base here. And now it appears to be moving out of that base. So this is a name where when you have a lot of COVID headlines on the tape, this one is looking like, it's pretty strong. We had Roku. And this one, I do have a core position in this one. I got stopped out of some long calls yesterday. And this one, shook me out and ended up having the move today up 10%. So this was another really good mover. And another name that I believe they had some good news, like signing a partnership or deal today. This one just looks very strong for the long term. Now let's see some of these other movers. Neo, this one I have a position in as well. I've traded this one to the long side, to the short side. Right now I have an earnings trade on this one. So yeah, today was basically a day where a lot of people were getting excited because a lot of these high flyer names had big moves. But you just want to be careful because at this point, some of them are kind of like counter trend moves. Others, like Square, this one is still in a nice uptrend. So you just want to be cognizant of like what's a counter trend bounce and what is still in an uptrend. Like Peloton, for instance. This is another one where the narrative's kind of broken here. It's a great company, but the narrative is just broken. So like this one, sure, it's been having a nice move, but this is still in a downtrend. And then we'll take a look at the style factors. You can see high beta stocks up 1.21% in terms of that reopening trade. We had cyclicals doing very well, up 0.45%. And then in terms of our lagging sectors, we had momentum, which got essentially a counter trend bounce, up 0.8%. And growth had a pretty nice day as well. In terms of my trades, I was just watching the price action today. I was trying to maintain my discipline and not enter new longs. But I figured, at the time when I put this trade on, the S&P 500 had broken out of that downtrend. So I said, to maintain my discipline, I don't really want to initiate swing longs, but I'll put this one on as a bit of a lotto. And I entered the 359, 360, 362 broken wing call butterfly. And I took in a very small credit of 4 cents to do that. For this trade to work and for me to get a max profit, I would want the S&P 500 to pin at 360. Given the headline we had after hours about, California closing down, it doesn't look like that's going to be in the cards. But the good thing is I took in a credit for this trade. And if the market has, like a down day tomorrow, I'm still going to keep that 4 cent credit. So for this one, we'll have to see what happens. A name that I'm watching, and this one, it really just stood out to me, Billy. Take a look at this one. This one reported earnings. It's a Chinese name. And take a look at this one. It's up 22% today. And it's coming out of about 3 months of consolidation. It's just looking very strong. So like where I'm sitting, I do have some cash that, can be put back to work. So really my goal, for tomorrow and moving ahead is like I have my core positions, the ones that I really want to be holding for the long term. I'm holding on to those. I do have a couple positions that are expiring tomorrow. So in terms of like OPEX, I'm just trying to land the plane safely. Like that's all I'm trying to do. And then that puts me in a position where like if we do get a leg down in the markets, whatever that might be, I want to be in a position where I can be very aggressive and very offensive. So over tomorrow and really over this weekend, I'm just going to be working on my watch list, looking for whatever has relative strength. And that is really what I want to be focusing on in terms of, the cash that I do have on the sidelines. Like, where do I want to put that to work? That's what I'm going to be focusing on for the most part. It's going to be less like, oh, guys, I'm executing like 5 long trades tomorrow. Like, that's not going to be what I'm doing. I'm just going to be game planning for the most part. But as always, we'll have to see what the river brings and what the price action brings, really. Now we'll take a quick look at some options order flow. This was so interesting to me, and now it makes perfect sense. One thing I wanted to call out is when you look at this order flow, I noticed these orders coming in after the market close. Look at these. They're SPY puts. And what I found was so weird about them was that they expire tomorrow. So I was like, these people after hours, after a nice green tape, they're buying puts on SPY. That really stood out. Like, they're not huge orders, but this one's 350K, 200K, 29K. So, like, they're not massive, but, like, this just it really stood out to me. You see these ones coming in for IWM as well. And sure enough, now after knowing this California headline and seeing the price action, like, this makes perfect sense. So, like, not to be all like conspiracy theorists on anybody, but like a lot of times people do get insider information. People do know things. So sometimes it does help to look at this order flow and sort of see like what moves are people making. But then in terms of the large orders, let's take a look. So we had during, leading right into the close, we had a bunch of people positioning in IWM. They're positioning in these small caps for March. And this definitely makes sense to me where you have that reopening trade. By March, we'll probably have, a lot of the American population vaccinated. So this definitely makes sense. I can see why people would be like, you know what, I'm going to throw a couple million at these small caps. Tesla, just got added to S&P 500. So we definitely have some more call buyers coming in. Tesla is a very popular name in terms of order flow. The normal SPY hedges that come in, almost every day. And this name, FBP. Sometimes I like to take a look. When it's a name that, like, I've never even traded before and never really looked at. Like this one, it's a $4.6 million order for January. So let's look at that FBP. Okay, FBP, this is First Bancorp. These regional banks have been in a very strong uptrend. And like you can even see from the sectors, regional banks have been a leader. They are up 20.15% for the month. So this seems like a momentum play in terms of like, let's see if this party just keeps rolling along till January. So I can definitely see why they're playing that. But those are really the most significant options orders I'm seeing. At this point, I would definitely just say, be cognizant of the moves that you're making on these downswings. And also, like, today, be cognizant of, like, what was I doing? Like, was I, like, picking out on calls, while these stocks were moving? Was I being disciplined? Like, those sorts of things. You basically want to, like, have your trading plan and stick to it as much as possible. And like once you start to get really good at this, you definitely can improvise a little bit more. But the discipline is very important. But that being said, luckily we all made it to OPEX, which is great. And these OPEX weeks, as I've been describing, they're very choppy weeks. And they can really test you. Like sometimes when the market is not moving at all, it's actually much more